Welcome to Flourish Focus, a series featuring one on one exchanges with fintech innovators from around the world. I'm Anuradha Ramachandran, Director at Flourish Ventures in India. As a global fintech investor, our focus is identifying technology innovations that, at their core, help directly or indirectly advance financial health and economic resilience for people and small businesses. Embedding financial services into digital platforms that are ubiquitous in people's lives has enormous potential. It can create an alternative to traditional financial channels that really promotes financial inclusion. But the advantages of embedded finance can only be realized through fintech infrastructure. I'm talking about the pipes that connect consumer facing platforms with regulated bank balance sheets at the back end. At Flourish, we recently expanded our commitment to critical financial infrastructure in India, where we co-led a close to $10 million Series B investment in YAP. Today, I'm thrilled to talk with Madhusudanan R, the co-founder and CEO of YAP, about why fintech infrastructure is so important for countries like India. Madhu, welcome to the Flourish Focus.
Hi, Anuradha. Great to be here today.
Great to have you with us. Can you start off by telling me a bit about yourself and your journey to becoming an entrepreneur?
Sure. We are a 5-year-old business. Prior to this, my co-founder and I were colleagues at Visa. Visa, as you would know, is a global payment technology company. So we were perched in a position where we kind of had access to what was happening not just in India, but we had a global sort of context, and we realized that globally and increasingly more and more companies were looking to add payment or banking or financial services products to their own user journeys, and the infrastructure that underlying infrastructure that supported some of these were really not built for an external world offtake. So we saw that as a gap, and we started sort of believing that increasingly you'll have more and more of companies and businesses will adopt payments in a big way, and that's how we started this company.
Great. Um, you just told us how you got started with YAP, but can you describe, what exactly YAP does?
Yeah, sure. So I think YAP is today has evolved into what we call as a API infrastructure business. By that, what I mean is we are perched in a position where we have two sides to the business. In some ways we are like a two-sided marketplace, where on one side we have regulated financial institutions which have the licenses, which have all that it requires to go out and build financial products, who do not necessarily or may not necessarily have the required technology and the back office engine room to run some of these products in a manner where third parties could come in and operate, right? On the other side of the equilibrium, we have fintechs, companies, businesses, very young companies which are actually sort of trying to be offering products to their own customers, who are looking to actually dip into the licensed regulated entities, but they may not have the means to reach out to them, or they may not be at a scale where it would be meaningful for the banks or the financial institutions to partner with them and sort of grow that business. So we are that layer or the glue that brings these two sort of sides of the two sort of together, and we kind of sit in the middle and orchestrate a lot of that fintech embedded finance in the market.
Great. Like we know the innovator side would be very keen to work with financial institutions. But how has your experience of working with financial institutions been? Are they really keen on digitizing? Are they worried about regulatory compliance layers, about security? How has your experience been?
Yeah, I think it's a very pertinent and an important sort of question. We have, and we've seen this evolve from a thought process as well, right? Over the last 5, 7 years that we have been operating, the thought process within bankers have also evolved. But if you actually really step back and look at what's happening in the market, we are probably in the third wave of banking access to banking and financial services, right? The first wave typically used to be brick and mortar, branch led, where even the regulator kind of sort of, stipulated that you have to open X number of branches in rural areas and so on and so forth. But over the last decade or so, what we have seen is the explosion of what is called as an alternate channel, which is an alternate to the brick and mortar structure, which incidentally is internet, and how you can render products through your mobile banking, your internet banking, and some of the marketplaces that you find where they are able to actually distribute financial services, right? But today, where we are sitting, we are increasingly seeing brands coming and wanting to actually own the story, and which typically is a customer whom we are serving, where they want to embed many of these financial products into their user journeys. It could be a gaming company, for all you know, which probably does not have anything to do serious business, right? Gaming is supposed to be fun, and how do you actually have financial products in a company that is actually looking to add fun and entertainment to a user segment, right? So therefore, uh, you have new cohorts of customers who are coming in and telling brands that we want to consume financial products from your storefront, right? So banks look up to these entities as the new storefronts for distribution of financial services, and in that, we play an important role in terms of managing how that product is rendered, right? So there is technology as one aspect, but you also have very important functions like how do you manage KYC, how do you manage compliance, how do you actually enforce some of the control functions that the banks would otherwise have. Those are all areas that we work very closely with bank partners, and today I can say with reasonable confidence that we have a lot more banks that are amenable to actually figuring out how to make this work, co-opt with a lot of fintechs, and really build this out as a as a serious sort of business line or a revenue line and a distribution line for their own businesses, right? Which is a big shift, in the way banks used to think maybe 5 years ago.
Yes, of course. In a sense, actually, we had different kinds of incidences like demonetization, for example, and now COVID, which have kind of like affected digital adoption. In that context, acceleration of digital adoption has become the norm over the last year. At least that's what we think. Would love to hear your thoughts. Is there a real tailwind in terms of digital adoption? Are there any challenges that you're seeing in that kind of a context?
Absolutely. I think India has been lucky where over the last 10 years, there's a lot of work that has happened on the public good infrastructure, which is your identity, is no longer an issue. You could virtually establish your identity sitting at home. You have, opportunity to actually build on payments infrastructure, which is also sort of, it's got to a point where it's a commodity. There is no arbitrage with respect to price or technology, or how you can run that as a platform. So what that leaves us with is to sort of see what are those triggers from an external world standpoint that can actually act as a stimuli. So we had that first event, and particularly around payments, and and a bunch of other businesses. In fact, in financial services, we had a huge offtake in stock market participation post COVID, right? Post demonetization. So a lot of these sectors that consumers were digital primitives, if I can use that term, actually became digital natives, right? Because the opportunity that some of these events presented forced a lot of the users to actually adopt digital and go digital. From a banker perspective or from a financial institution perspective, what would otherwise take a decade actually happened in the past year or so, right? So, and it's a and people who work with banks would sort of allude to this, where if you have to make or launch a new product or change some of the processes that are there at the bank, because of the variety of aspects that are associated with it, it used to take maybe 2 3 years, which all got forced into in the past a few months, because there was lack of no choice. So therefore, I think COVID certainly acted as an accelerator in the way embedded finance can sort of take off, and we are like, I think the tailwinds are here to stay at least for the next 3 or 4 years.
That's great to hear. You just spoke about your two-sided marketplace, right? Like you were, and on the side where you have the fintechs, like there is product innovation as well as the technology innovation that's happening. But if you think of the more used platforms, right, in that for them, financial services is something that is new, right? It's an important part of their business, but nevertheless, it's something which is new. So, can you talk a little bit more about how you work with them? Can you talk a little bit more about like the innovative financial products that you've enabled with fintechs or with platforms,
Sure.
and what's your role really in this context? Do you, in the context of platforms, also look at a product layer,
Sure.
or are you talking only about technology integrations?
Sure. I think the way we sort of break this into two or three parts. So we have a wide variety of customers. We have very young companies, companies that are just born out, who come to us because they want to take out our platform and it accelerates their go-to market. At the same breath, we also have a very large consumer internet brands. There is no lack of, there's no dearth of talent or capital or their ability to actually build some of this. But the sheer fact that we are able to provide this in a manner where for them it becomes iterative. They could actually put out products quickly, sort of really test it out in the market. Gives them a lot more freedom from a product manager perspective to actually figure out what's the right fitment, right? And we also have a third cohort of customers who are traditional sort of businesses in a sense, who actually are not so much appraised about what's happening on the digital sort of side, right? They know that they are likely to get disrupted by these disruptors, so there is a fear of missing out. So those companies also we serve in a meaningful way. The underlying theme in all of this is that we spend a lot of time sort of working with these companies to actually co-create solutions, right? So if there is, let's say, for example, somebody who is providing credit to new to credit customers, they may just come to us for maybe a payment solution to be layered on top of their credit product, but we may actually have something more to sort of offer to them when we actually look at their customer profile and the demographics whom they are serving, right? So in each of these customers, while our core product could be very cookie cutter, we would actually have spend a lot of time working with these companies to really create meaningful products. And again, it's not a destination, it's a journey. So we evolve with them. Some of the companies who have stayed with us have like 3 or 4 years. As a company, we have, if you have 5 years, I probably will have like a dozen companies which are with us for the last 4 odd years, right? So we kind of have grown with a number of these fintechs as well, and that allows us to be seen as a partner in their growth story. So even if they're going to work with our competition in some way, we are the first people to sort of know, because we are, in most cases, we are part of that organization as well.
Great. Okay. Let's switch gears a little bit towards monetization. There's a perception that India as a market is very value conscious, right? In that context, it ends up being very thin margin. And therefore, it is difficult to build large businesses relying only on transaction revenues. Do you want to talk a little bit more about your model and your experience in working with large institutions? They've typically been used a little bit more to software vendors, FTA-based billing,
Right.
etc. Right? How open are they in terms of partnering?
Sure. Yeah. So again, it goes back to how we are, in how we operate in the marketplace, because we have two sides of the equation. To the bank, it's always about, what is the opportunity that we are bringing to them. It's not about, doing a typical technology sell to a bank is most banks, it's an RFP process. You have the technology team sort of buying that, software through a process where they go through, they put you through on a treadmill where you have to, whoever is able to have the maximum stamina to discount, they end up winning it, right? But our conversations have always been to the business side, talking about, and this varies by bank as well, right? So if it's a small bank, you might have balance sheet growth as a big motivation. But if it's a large private bank with significantly large balance sheet, it may be about our ability to get new partners in the form of fintechs or large consumer internet stories to partner with that bank. and really sort of be, help that bank be seen as a fintech friendly bank, right? So the motivations also vary with some of these financial institutions. But what we are seeing as a theme is that on the bank side, because we are able to take opportunities and help them, sort of put that out in the market faster, we are able to actually sort of extract, whatever is the monetization available for that product or service, right? I'm making it an abstract because it can vary by product. Uh, while on the demand side, we have companies that are coming out and sort of doing it. For them, the opportunity cost of not working with our platform and maybe spending a year building this product out or by working directly is pretty significant. So therefore, our ability to extract value from some of the customers who use our platform continues to be there. Yeah, India is a difficult market to make money on any business, and especially in payments where there is very little or no margins. But the good news is that if you're able to get to a point where in India we are able to build a meaningful revenue business, in any other market that we go, it's going to be a cakewalk, right? So that's probably is the driving factor.
So you've just raised about like $10 million. This is your second fundraising within a year.
Yeah.
You it looks like you are set on a good monetization path, and you're profitable already. So in that context, like what would you use this capital for? How are you going to deploy it?
Sure. Yeah, I think when we started out, we said we could, we wanted to be bootstrapped for the longest period, and for the first 4 years, we continued to be that. What that allowed us to do, as an organizational DNA, is to sort of remain frugal and try to sort of extract, more value for everything that we spend money on, right? Whether it's people, whether it's technologies that we build, or just the sheer fact that how do you sort of go out and chase growth, right? Fundraising to us was sort of an ammunition which allowed us to go out and build more aggressively. So therefore, even if we don't deploy this capital, our growth is certainly not coming down, right? So because we are a momentum business, the companies that whom we serve, naturally they will grow, and we are a benefactor out of that. But what the capital would mean is to sort of really look at take a sort of a view into the future and start building products and capabilities which can really help us stand out in the market 2 or 3 years out. So in many ways, we will build capabilities that will sort of kind of shift the goalpost in terms of how we are seen and perceived as a company, bring out new products, etc. So therefore, there's a lot of investment that will go into building our teams and building our capability sets for the future. Another part of that is also about our intentions or our aspirations to become an international company. So we'll go sort of start doing work, meaningful work in some of the other markets in Asia. We have kind of got to a templatized process where we realize that every market, there are market nuances. The way you work with the bank is pretty similar, but everything around that, from regulation and whatnot, it really takes about a year for us to actually open up a market and start doing business in there. So therefore, we need to invest in some of these markets where we believe that over the course of the next 3 or 4 years, we can build valuable sort of business, right? I think in a combination of new product development where we'll assemble a larger team, and international markets is where we look to deploy the capital that we've raised.
Thanks, Madhu. As Flourish and as a global fintech investor, for us, the global markets are also, very important.
Yeah.
But how do you see this platform moving across markets, where the payments infrastructure, the rails on which you actually like operate, if it is different, can you really replicate what you've done in India? Are there any India-based innovations that can actually help you build inroads? How do you see that?
I think today we are in a position where, at a broader macro level, India is seen as the leader with respect to sort of enabling digital access, right? Not even financial services, but the way we have managed the vaccine rollout as an example, right? if you are in the US, if you're taking a vaccine shot, you get a piece of paper on which you're given that you've taken the vaccine. India sort of sends out an SMS, and I'm just going to brag about it, because there's a global audience. We actually send out a QR in almost a matter of seconds, where it's on your SMS, so it's part of your passporting on a vaccine sort of standpoint. That is the India that we are today, right? On every aspect of macro digital enablement, there's a massive government push that is actually enabling private enterprise to go and innovate on top of it, right? The UID and the identity layer that came about almost 10 years ago is driving a lot of innovation on ground with respect to how you can offer or render financial services. As we go to other markets, we have a lot of interest around how India has executed on UPI as an example in payments, right? There are banks that are in the Middle East, for example. We have bankers coming in asking, how do we build an UPI like platform? Can we just offer it to, maybe we can get two or three banks together and, offer it as a product for between our banks. So there's a lot of people who are looking at India today to really port products and technologies that we have built at scale, and can that get localized to that market, right? So that's thematically that's happening. And when we go out, what typically happens is that a lot of the work that we do here, by virtue of even a regulatory sort of climate that is out here in India, a lot of regulators also respect the work that Indian regulators have been doing. So if there is a meaningful way by which we have sort of created an ecosystem and we've been able to build a business on, there's a lot of recognition and appreciation to sort of replicate that work. Although you'll have like a 15-20% localization that may be required, because you might have a local network to connect in and things like that, right? But I just believe that India will become this sort of fintech factory, if you will, over the next 5, 7, 10 years, and a lot of markets will adopt what is getting churned out of India.
Well, that's obviously exciting to hear.
Yeah.
So there's one critical part of this whole story, right, which is likely to be the team. You're building a team which is on the cutting edge of innovation, which also takes care of things like compliance, regulations, etc. across markets, and then you're looking at global front end teams as well.
Right.
How are you visualizing this? How do you think about this particular challenge?
Yeah, I think it's like if I have to draw an analogy, it's like assembling a cricket team, right? So you need the sort of exuberance of the youth and the experience of the sort of established players to make a right mix. So if you look at our team, we have a bunch of folks who have been there in banks and financial institutions, who have actually delivered at scale. But on the other end of the spectrum, we have nerd technologists who have built scaled platforms. So we have folks who have worked at Amazon and a bunch of other large platform plays in the US, who all have sort of come back and sort of looked at our company and said, it's interesting work that we could do here, right? So we are trying to actually unbundle the whole seriousness of the financial services from a tech build standpoint. So we are able to sort of productize it, with a higher degree of speed. At the same breath, the sort of the experienced sort of folks would make sure that we are always in check in terms of compliance and all of the stuff that bankers today federate the trust to us, right? And it's an important sort of aspect to make sure that we are seen, although we may not have the licenses to run a banking platform, or rather we are not a bank in many ways. We would like to believe that whatever we do, we give the same seriousness and depth in execution as a bank would otherwise do, right? That's when bankers would get the comfort. That's when they would sort of give more and more of their business to us.
That's great. Okay. So, as the final question, where would you see YAP 5 years from now?
Oh yeah, so I think 5 years from now we probably should have got listed as a company. That's personally been my sort of aspiration. I think we got lucky to this point. I think we have a foundation and a platform, and it would be my personal failing if we don't go out and become a public company in the next 3 or 4 years. And we have all the right ingredients in place. We've got a great roster of customers. We got fantastic investors sort of back us for the long term. I think we have got all the sort of enabling sort of infrastructure to actually go out and build a large company. I would like to see this into a pan Asia or potentially a global company in the next 4 or 5 years, and we kind of list somewhere in the 3 to 5 year sort of horizon.
You know how well that resonates with us, Madhu.
Yeah,
And we are really very excited to partner with you on that journey as such. Thank you so much for joining us today.
awesome. Yeah, it was great having this conversation, Anuradha. I think we have been sort of having sort of engaged for the last few months, and it's exciting to sort of partner and sort of grow this company together. Looking forward to it. Thank you.
India is a really important market for Flourish. As you just heard Madhu articulate a few reasons why it is different from other global markets as such. We've made a number of complementary investments in companies that are market leaders in their respective segments. Some of them, like Zest, in the checkout consumer credit space, Indifi in the digital SME credit space, Scriptbox, which is in the wealth management space, and Toffee Insurance and Micro Insurance, to name a few of them. These investments have deepened our understanding of the market and has helped us grow our own local networks as such. And this growth of our portfolio in India is reflective of the improving digitization of the financial services in general, and is rapidly accelerating in this market. We see a great opportunity to play our part in building a fairer financial system. And we look forward to bringing you more conversations with entrepreneurs who share this mission, like Madhu. For questions regarding today's discussion, Flourish Ventures, or a portfolio companies, please email us at events@flourishventures.com. Thank you and see you soon again. Bye.